Hi, and welcome to this installment of Frank and Mary here in Northborough. If you haven't seen this show before, my name is Art Bergeron. I'm an attorney at Myrick O'Connell. There are 70 of us, biggest firm outside of Boston, 40 in Worcester, 20 in Westborough, and 10 in Boston. Because there are so many of us, everybody gets to do what they like, and I really like doing this. I like doing elder law. But this show is not about elder law. If you've seen the show before, you know that it's really about my friends Frank and Mary and their kids Peter, Paul, and Mary Jr. If you've seen me do one of the seminars that I do at the library, you know that Frank and Mary's goal in life is to live in their house until they die and be buried in the backyard. And if you live in Northborough, that means you want to stay here. You don't want to go to San Diego to be with your kids. You don't want to go to DC. You don't even want to go to Marlborough, where I live. You want to be here. And so the question is, who are the people you need to know? What are the programs you need to know about in order to just stay here, just as long as you want to stay here? So as you noticed, my co-host, where is she? Anita Hagspiel is not here because she went to Florida and she's enjoying herself now for the next like 3 or 4 months. So in the meantime, I'm doing this show myself, but although it may be, I found, I think, a new co-host for a while, my friend Chris Lindquist, who runs your library. So he may be on next week. But in the meantime, I wanted you to hear from Frank Dutt, who is my guest today, because it's tax time. And you need to be figuring out whether you need to be doing a tax return, whether you want to be doing a tax return, even if you don't need to be doing a tax return. What are the issues that might be really of interest to you kind of uniquely as a senior? And Frank, that's why I invited you to come on. You were very kind to do this. I had no idea until we met last week that the tax preparation program isn't like totally locally based, but is really kind of a big IRS-based program. Because can you just talk a little bit about what the program is about?
Yeah, sure.
Where people would participate here in Northborough, and then we can kind of talk about some of the issues, because I know one of the things that really struck me when we talked the last time was the fact that even if you're not required to file a return, you may really want to anyway. So tell me about the program and how exactly did you get yourself involved in this? And do you get a lot of money for this?
Oh, yeah, right. We get a lot of money, just like you do for doing this.
For doing it, yeah. It's the same pay scale, yeah.
Yeah. Well, first of all, I got started about 15 years ago. I worked at Eastman Kodak in Rochester, New York, and retired, and after a year got bored and saw an ad in the AARP magazine, volunteered, and fell in love with doing taxes. So my wife thinks I'm crazy, but it's really if you...
I gather you're a person who always did your own tax.
Yeah. And if you like doing something with people and helping people, it's really a good program. So the program is national. The IRS has several programs to help low and moderate income people prepare their tax returns. So they pair up with AARP. We're about third or fourth largest tax preparer in the country, behind some of the names like Block that prepare a lot of returns.
So it's a national organization?
It's national, 2.5 million returns last year. It's staffed by a very small paid staff, and then a volunteer organization that kind of runs like the military. They all have jobs and works very efficiently, all retired people. And then it's pretty much state-based because you got to deal with all the local state issues.
Because you do both federal and
we do both state, federal, Massachusetts returns. So we have just under 1,000 volunteers in Massachusetts. We're located in maybe a half of the towns, a lot of the smaller rural towns where we don't have sites, but almost all the urban areas. Like I said, the program is intended for low and moderate income seniors, although by law we cannot discriminate. You don't have to be a senior to go to one of our sites. And we do...
But we don't want that to get around because you get kind of limited capacity.
Yeah, we have limited capacity.
Don't tell any of your young friends that you can do it. Yeah, okay.
What we studied. We do personal income tax returns with most of what you would see. There are some exceptions. We can't do anything that involves depreciation. So we don't do rental properties. We will do small businesses if you have no employees, no inventory, and you don't take your home as a deduction because that's rent. Gets involved in depreciation. But so we're there.
And step back. You said that it's designed for low and moderate income folks.
Mm-hmm.
So is there like an upper income limit to who you would talk to?
Yeah, we.
Or is there like a guideline?
Yeah. I'll come back to that. Circle around in a second. And then the state is broken into 12 different districts. The district that we're in covers mostly Worcester County and the far western counties of Middlesex. And then each district is broken into kind of groups where we run sites. And I run the sites in Hudson, Marlborough, Northborough, Shrewsbury, and we're thinking about doing something in Westborough.
I see.
So, and let's see, we're talking about the returns we do. So person would come in. First of all, we only do things by appointment.
By appointment.
At the senior centers in those towns.
And in Northborough, you do it at the senior center?
At the senior center.
Okay.
Yeah, and we have.
So you see people at the senior center, and then to sign up or to schedule an appointment, we got to talk to the senior center.
Call the senior center. Talk to the volunteers at the desk.
And we'll have a banner on this show, just giving people that phone number, just to make sure they've got it. Yeah.
And don't do that before the 15th because
the 15th of
January.
Before the 15th of January.
That's only a couple days away. I still have to get the schedules out, but we'll get the schedules out. You have roughly an hour appointment. We can do almost anything in that hour. Let's see.
Which was pretty impressive. And the appointments run right up until pretty close to April 15th.
April 15th, right? And we do everything as e-file. And we have a requirement that we do both state and federal. For example, if you were a state employee, you may not have to do a state return, but we would do a state return anyway. And there are some instances where you don't have to do a federal return, but we need to do that to do a state return.
And you said you'd e-file. So when people go in for their appointment, at the end of that appointment, you're literally filing the return.
Yes.
You're filing the return.
The IRS will have the return before they get to their car.
Wow. So you obviously need and so do you give people some list of the materials that they're going to need, and how do they get that?
If you sign up at the center, they'll give you a little half sheet of paper that has all the things to bring as a reminder. It's kind of like when you go to the doctor. It'll have your date and time of your appointment. Please bring these things. But basically, if you bring last year's return, and we can scan down and see if anything's missing, and you can either go and come back or make another appointment. It works out.
And while you can sign up starting January 15th, there are some towns, I know that you mentioned to me, where like you sell out. So that, and do you know if that has traditionally been the case in Northborough?
Yes. When I started in Northborough about 7 years ago, we did less than 40 returns.
Yeah.
Last year we did about 120.
Wow.
And they turned people away.
And they turn people away.
Yeah. The limit is volunteers, to be honest. Right. And fortunately this year I picked up 3 new volunteers, so one of which will be at Northborough. So we'll be able to do a few more at Northborough.
And so, by the way, parenthetically, as you say, the limit is volunteers. So if there was somebody there that said to themselves, I want to be the new Frank Dutt. This is my goal now in life, right? Who do they call? Do they call you?
The easiest thing is to go to AARP.com, and there's a little thing there where you click the volunteer for the Tax-Aide program, and that hooks us up.
I get it.
That's the easiest way. You have to do that anyway. Everybody has to be registered with AARP for some insurance issues. We all have to be certified. The IRS, that's an IRS requirement, but that all begins with filing with AARP.
We're just signing up.
Yeah.
And so you said you usually fill up in Northborough. So if you were guessing, when?
Mid-March.
Mid-March? So if people haven't, even though their appointment might be sometime in April, if they haven't signed up by mid-March, they're probably out.
Right.
So they need to be thinking about it right
away.
Yeah.
If you, like for example, if you have investments, you may not get your documents till the end of March. But if you wait till the end of March to make an appointment, you won't be coming to one of our sites. They'll all be filled.
And it seems to me, I remember talking to somebody who said, it's a good idea to sign up early anyway. I remember talking to somebody who had this horror story about, he went to file his return,
Yep.
and the IRS said, oh, well, you already filed 3 weeks ago.
Yep.
What happened? Right? Well, somebody was filing,
Somebody filed their return, yeah.
trying to get their money.
That's one reason why people may want to file. We'll talk about that. Who has to file?
Oh yeah,
And who should file? With the recent changes in federal tax law, there are a lot of people that do no longer really have to file a federal return. The standard deductions are so high. However, Massachusetts has a requirement that if you have more than $8,800 of income, what used to be called the federal adjusted gross income, you have to file a Massachusetts return. So Social Security doesn't count, but if you have an IRA or a pension payment that is over $8,000, you're supposed to file a Massachusetts return.
So pretty much any former public employee, right? Anybody with a public pension.
Yeah,
Well, most of those are going to be above that number.
And the deal with the public pension is they have to file, even though that gets excluded, they don't pay tax on it, but it's in their federal AGI, so Massachusetts theoretically could come and ask them about it. The low-income people haven't been hassled, but theoretically that could happen.
I see. And I just want to go back to a question that I was mentioning earlier. So if I were thinking about doing this, how much should my income be in order to think about making that phone call?
Yeah, right. I started out. AARP and the IRS, say it this way, the IRS will not allow us to set a hard ceiling. We have a ceiling, the areas I serve, somewhere around $80,000. If you come in and you earn more than that, we'll try to shame you in not coming back because what you're doing is taking a slot away from somebody who may not have the $150 to go to block to get a return done. Right. And somebody with a higher income, they should be able to afford that.
But 80,000, is that 80,000 for a couple or 80,000 for a single person?
That's just a rule of thumb.
Just a rule of thumb.
Yeah.
But that's, I do a lot of this work, and I don't see a lot of
seniors
with that kind of income.
No, neither do we.
Right.
So,
that's big income.
Maybe once every other year, somebody will come in with that.
Right, because they'll have assets, but they won't have.
They won't have the income.
Because once again, even with their IRAs and their 401ks, the only income that you're counting is the required minimum distribution, right?
And pension.
Oh, and the
pension, yeah. Yeah, I mean, I think our average return is in the mid-20s, and some of them are low. I don't know how they can live in Metro West and have the kind of money they do.
I could tell you a case that I just talked to a lady today. How is she living on Social Security of less than $1,000 a month here?
Yeah, exactly.
How exactly do you do that? It's beyond me. So those are the requirements regarding having to file.
Oh.
But I know that one of the things that we've talked about was that you may really want to file, right?
Yeah.
So talk about that and talk about the circuit breaker program.
There are a couple things. I mean, traditionally, you would want to file if you had any withholdings, so you could get your withholding back. If you were younger, you might get earned income credit. If you had children, there's some credits you could get that are refundable. And so for the retired person, most of those don't apply. However, for the retired people, there's something called the senior circuit breaker, which currently is $1,130. And that's a return on the real estate tax that either you pay or your landlord pays if you rent. And the formula is pretty simple. You take a quarter of your income.
Oh, and by the way, this is a program that will send you back money.
A check.
Even if you didn't pay it in.
Don't have to pay a cent.
So even if you paid no withholdings, even if they didn't deduct anything, right?
Yeah, and the first week or two in February, matter of fact, almost everybody we do is somebody that's basically on Social Security. They haven't got any of other documents because they're not going to get any. They come in with their Social Security statement. They own their house. They bring along their taxes. We go through the calculations, prepare the returns. Most of them walk away with $1,100.
So now tell me how the formula works.
Yeah. Take a quarter of your income, and your income includes all the normal things, plus you have to add back in Social Security You have to add back in some instances what's called return of capital. For example, if you have medical payments taken out of your pension, it won't show as a taxable amount, but we have to add that back in. And food stamps would get added back in. Veterans disability. There's some things that have to get added back in.
But for the typical person, it's
typical, yeah.
Social Security, pension,
IRA, a little bit of interest.
Maybe the IRA. So you take that as your total income figure,
and
right?
take a quarter of that.
If you're a quarter of that, if you're a renter, or if you're, say I'm a homeowner. Say
take
I'm a homeowner.
10% of your income. I'm sorry, misspoke.
Okay, so
10% of your income.
So if I have a house in Northborough, right? And so I've got to either I or my spouse and we have a house, right? And so now we add up all of our income, right? And we take 10%, and we figure that out, and we add, including Social Security, right? And including your other income, we take 10% of that, right? And then what?
And then you add up your real estate taxes that you paid for that calendar year, not the tax year, but for the calendar year, half your water and sewer bills, and if that amount, your taxes plus water, or half your water and sewer, is higher than 10% of your income, you get dollar for dollar back, up to $1,100.
So, for example, my wife and I, we got Social Security, we got a little bit of an IRA or a 401k or whatever, so we're making $40,000, right? 10% of that is $4,000. So we add up we take our Northborough tax bill, right?
Right.
Which it isn't hard to see a Northborough tax bill is for $4,000, right?
Nope.
Then and in addition to that, we add 1/2 of all the water and sewer that we paid during the calendar year. So it's during the entire calendar year, right? And if that number is over 10% of over that $4,000 figure, we get a check back from the government. Dollar for dollar, up to this magic number, up to
$1,130.
Up to $1,130.
Yep.
This is a gigantic benefit. A gigantic benefit.
For low income people, it's really super, and it's one of the reasons I enjoy doing this. You see somebody come in and
they had no idea they even needed to file a tax, or that they wanted to file. They knew they didn't maybe need to, but they had no idea that they wanted to.
Yeah.
Right.
Your buddy Frank told them to come and get some free money.
Yeah.
And it happens, and every year we have several people come in. That's the case, and they're delighted. And depending on how busy we are, then we can go back 2 or 3 more years and get it going back. We may have to schedule for later in the season if we ran out of time in that appointment. But we'll go back and help them recover for a couple of years back.
So if I'm filing right now in 2020 on account of 2019, because I'd never done this before, we may be able to get you money. You may be able to get money for 2019, maybe even 2018 and 2017.
17, yep.
Wow, that's really huge.
Yeah.
Now, and this even applies if you're a renter.
Yes. If
Tell
you're a
me
renter,
about the difference if you're a renter.
Renters, a couple things apply. You can't live in subsidized housing, so that's one thing that takes you out. And you have to be willing to give the landlord's name and address. And if you do that, you take your rent, take a quarter of the rent, and if a quarter of the rent is higher than the 10% of the income, again, you get money back. That doesn't happen quite as often, but it does happen.
Although, I would think the closer you are to Boston in terms of the rent. So once again, let's just do some numbers. So say I am renting and it's $1,500 a month, right? That's not an unusual rent around here. $1,500 a month times 12, $18,000. 10% of that,
a quarter of that.
So that's a quarter. So a quarter of 18 would be
about $4,500.
About $4,500. So now I look at my income side, right? So if my income was $40,000, 10% of that is $4,000. My 25% of my rent was $4,500.
Get $500 back.
I'm going to apply. I'm going to get $500 back.
Yes.
So I guess the moral of the story is, if you're not great on math,
come on in.
Just come in. That's right. Tell them that Frank sent you.
Yeah. When they call us, talk to people at the center. Just say, yeah, we saw this and we want to make an appointment. Yeah.
So tell me about are there any recent changes in tax law that folks should be aware
Yeah,
of this year?
there-
Anything special thing? And what are the kinds of issues, other than the circuit breaker, that often people talk to you about? And then tell us a little bit about, what happens if I can't pay?
Okay. Well, for most people, the only change that happened this year is a change that didn't happen. The law was supposed to say the medical threshold was going from 7.5% to 10%, but that was rescinded, so it's 7.5%. That's only if you itemize, so very few people itemize anymore.
Right.
That's really the only
Kind of major
tax
Yep.
change.
But I would just mention, once again, that's a big deal to a lot of folks that I deal with who have got somebody that's in a nursing home,
Yes.
or that they're living at home and they're getting a lot of care at home.
Yeah, a lot of
Right.
home health care, yes.
Right. So, because as I tell people, and many people are astounded to realize that just getting home health care, if you can get a doctor or a nurse or a medical practitioner to certify that the person's receiving the care at home because they need to be at home, because they need assistance with
Right.
two of the activities of daily living, or because they've got cognitive problems, it can be a huge deduction.
Right.
Right.
And what happens, the impact on the federal now might be small. The impact on the state return, if you have medical deductions, federal, they carry over to the state, the only thing that carries. And then that reduces your state tax. For example, in my personal case, we have long-term care insurance, which is a medical expense. And lo and behold, I didn't have enough money to itemize, but because I had this long-term care insurance, I had very high medical, just below the standard deduction. But all that money carried over to the state, and I saved $200 or $300.
I see.
And
see.
this is the kind of thing, when you come in, we have this long form that you have to fill out asking you a lot of questions. And if you indicate that you have some questions about medical, we'll take some time and talk to you, because often that's the case.
But I suppose, once again, the moral of the story is, don't assume that you know.
Yeah.
There's just no reason to assume it, especially if you can manage to get one of these slots. So you're getting to find out for free,
For free. Yeah.
whether there's money that you actually can be getting back, which is like a big.
Yeah, I've been doing this, like I said, 15 years. Probably in that time have seen 200 or 300 returns a year, so however many that figures out to be. And I have yet to have somebody come in that they've done a return and they want to check with ours, which we discourage. But we did it, and we did not come out with a better answer than they did. There are so many complexities in the law. We have to take training and pass the certification tests, so we're much more up on things.
So by the way, now that
average
you're
person.
kind of supervising several communities, did they give you a raise as well?
Yeah, right. I get double nothing.
That's great. That's great.
It's fun.
So now talk a little bit about the issues that might come up for a lot of seniors if they can't afford to pay.
Okay.
If they're stuck.
Yeah, if you can't afford to pay,
First of all, do you talk to folks? Do you deal with any of
yes.
deal with
Oh,
those
yeah.
issues?
Well, that happens often enough. We have a standard speech that we give. If you owe money, you are required by the government to file your tax return by April 15th and to make a good faith payment by April 15th. And then after that, if you say you owe $2,000 and you can only afford to send in $300, the government then will, in their time, which somewhere in the order of 2 months, so you already bought yourself 2 months, they'll come back and they'll give you a choice of a number of payment plans. They have extended payment plans. You can put it on a credit card. There's some sort of appeal process. We can't do any of that, but just by filing and sending it in without the full amount, they'll come back to you and work out some kind of a payment plan. It's relatively painless. I think one of their options has a small fee. The rest of them is just interest. So for sure, people ought to do that. It's a lot better to do that because no penalties get assessed.
And if you don't, because if you don't file your return,
and you get caught.
What's the penalty?
We're not allowed to calculate penalties.
Yeah.
I don't actually know, but
you
if
just
you
don't
owe money, my guess is in the order of 20% or so.
So it's the kind of thing where you don't want to be there.
You don't want to get caught.
Right, and because if I recall correctly, the tax payments are one of the few things that can be taken out of your Social Security check.
Yes,
Actually,
yeah.
if I recall correctly,
you-
it's like the only.
If they file a judgment.
that check is totally safe from all creditors except the government itself, right? So they
I
can
think so.
kind of so they can kind of get you.
Yeah. Oh, and you asked about it on the change. Something else that happened really recently, something called the Secure Act. And that's what changed the medical deduction. But there's also a couple other provisions that seniors might be interested in.
By the way, I'm one of the seniors that's very interested.
We'll
that's
talk
very
about this.
interested.
If you have an IRA, you know at 70.5 you have to start a minimum required distribution. Well, that's now been changed to 72. So you can delay taking money out of your IRA another year and a half.
Right. See, I'm going to be 70 in 2 weeks, so this would have been the year that I would have started needing to take that check.
Yeah.
The second one, though, is a big deal too.
The second part of that, well, the one other thing, if you are in that circumstance and you're working, you can contribute to an IRA now as long as you want. You can be taking money out and making contributions at the same time. So that's new.
And once again, that's a big deal. I think for a lot of us.
For a lot of
us,
working people.
Right.
Yes.
Who are kind of, well, people that like their jobs or people that just are, need
Stuck
to do
working.
this.
Yeah.
They're stuck.
And the downside of that is that for an inherited IRA, when somebody dies and you have an inherited IRA, if it's your spouse, there's no change. If it's another person, adult or child, of a inherited IRA, they now have to take the money out over 10 years. And it doesn't have to be, there isn't a requirement that you have to take it out any given year, but by the end of 10 years, it all has to be withdrawn.
It has to be out. Because the old rule was that it could be over that person's
the whole lifetime.
actuarial life expectancy as a date of death. So that's also a big deal. I think we're adjusting to that in terms of doing kind of forward planning for a lot of folks.
Yeah, they're all new enough. I mean, before we would.
And by the way, does that apply to folks who have got inherited IRAs now that may be taking it over their lifetime? Do they have to shrink it, or does it only apply to people as of?
I forget what the law says. It's something we don't really deal in.
Yeah.
And I just noted that it was there, and
So this is one of the few questions that you can't answer.
I can't answer.
Thank God we found
one. And that's why I brought my computer along. I would look it up
just in case.
And look it up. Yeah.
But so listen, this is just a wealth of information. But the bottom line, as I often tell people, even when I'm doing seminars, and people come up at the end, they go, "Mr. Bergeron, how do you expect us to remember all that?" And I say, "That's not the message. The message is ask.
Ask,
right?
exactly.
Ask, right?
Yep.
And if you're in Northborough, where there's a lot of demand here in Northborough, ask soon.
Ask soon.
Because you're telling me that
well, actually,
yes.
Actually, all the sites. I have sites, like I said, in Hudson, Marlborough, Northborough, Shrewsbury, and the only site that, for some reason, doesn't fill up is the Shrewsbury Senior Center.
So in other
Shrewsbury Library.
So in other words, if I put on my Shrewsbury disguise, I could actually go to and I'm sold out in Northborough, I could still go to the Shrewsbury.
The
Library.
Senior Center directors are really good. They cooperate, and last year they had a problem in Clinton. One of the people got sick and left. And the Director Clinton called Kelly and said, "Hey, can we come to Northborough?"
Here in Northborough,
and Kelly said, "Of course." So we had people from Clinton.
That's true.
They cooperate, so it's not a big deal.
They bond here, right? Yeah. Although we're all kind of distressed that I think that Kelly Burke just recently retired here in
Oh, I didn't know that.
Northborough.
Oh no.
Very recent news. But but to be working at the Massachusetts Association of Councils on Aging. So now she's doing some statewide stuff. So Frank, thanks a million.
You're welcome.
I think this helped a lot of people. So the bottom line, ask. And ask soon, because if you're in Northborough and if you haven't asked by about mid-March to be talking to these folks, you may not be able to do it. But there's a great program. Frank, thanks a million for this explanation. I hope you found this helpful, and we'll look forward to seeing you on the next installment of Frank and Mary here in Northborough. Thank you very much.